One of the things that was challenging in Jersey City, I think, when you go decades past, is that we have a stigma, which many of you are familiar with politicians and elected officials running into legal problems. And I don't say that really as a joke. I say that in all seriousness because it's been a hindrance in many ways from a development standpoint, because it creates uncertainty from a financing standpoint, it creates uncertainty from a development standpoint. One of the reasons that that's really been at the forefront of concern is because of the piloted and incentive programs and how it has been approached in the past. Jersey City really was aggressive with pilots, but there was never really a concerted effort to put one clear policy in place. And what that lended itself to was a situation where you could have multiple buildings in a row, very similar in structure and size, with grossly different tax abatement deals. And Jersey City's been sued in the past for that, and we've lost. What we tried to do over 2 years ago was to implement a structured policy that was very clear, very transparent, with what somebody would be able to apply for based on where they are building in the city. And it was structured in a way to encourage people away from the waterfront, scaling up from 5 years on the waterfront up to 30 years if you are a commercial building in areas that Jersey City put at the forefront of, from a planning standpoint, of needing investment and development. And I thought that was important for a couple of reasons. I thought it was important because it would be a positive to the constituents that elect me, because they would understand exactly what the rules are, how I'm approaching it. It would be a positive also from the development and business side, because they would also understand what they would be entitled to. We developed the zones, which you could see on the city's website, not in a political way. We did it based on the census tract. So we looked at income in areas where we wanted to encourage development and investment based on what the census income was in those specific areas, and we tiered it from there. And it's really been successful, where you've seen, for the first time, as I touched on earlier, significant investment and development away from the waterfront.
Whenever the developer is considering what the capital stack is going to be, pilots and several other things, including state programs like ERGs, Economic Opportunity Act grants, that's part of the calculation. In the past, when developers would approach the city for a pilot, it was to a large extent, it was a free-for-all. It was a negotiation that took place. You never knew whether you're going to get a 20-year pilot at 15% of annual gross revenue, that's statutorily controlled, or you're going to get a more aggressive pilot. The mayor's policy has been sensitive to that. The tiering basically has less pilots, a lower pilot on the waterfront, because basically the waterfront is almost fully developed. There are pockets. But if you need to encourage development westward, the pilots get better. At General Square, there's a core area where the statutorily best pilot you can get, 30 years at 10% of annual gross revenues. Those occur, but they all occur, let me tell you, in the context of other programs. So you have a pilot, and developers constantly want to consider redevelopment area bonds, and redevelopment area bonds is part of the consideration as well. State grants of whatever kind, whether it's DEP infrastructure grants or some other GROW grants, those are all part of the calculation. So although the pilot structure is much better than it was before, it's still a challenge for developers to figure out how they're going to finance whatever development they have, and depending upon the size, of course, they intend to do. But let me tell you one more thing. The political atmosphere is critical to determining whether a developer is going to put in $50 million, $100 million, $250 million into a project. And we have in Jersey City a very professional planning staff, and we have an administration that's sympathetic to business growth. And it is, as far as I'm concerned, it's one of the best areas in the state to be doing this kind of business, but it's still challenging.
There's a couple of things that go with pilots as incentives. One is, and it goes back to the balance between the municipality and the developer, Somebody said earlier in the other panel about being a long-term holder. So certainly the tiered structure in Jersey City that creates longer-term incentives, deeper off the waterfront, creates a longer-term holder and probably the backbone for longer-term success. But also the developer's view has to take into account equity investment view and lender view. And so these pilots really do provide stability and certainty as to the tax structure that any of these developments will be under for whatever the term is and under whatever the percentage structure is. And that certainty, as we learned coming out of the economic downturn, has become one of the linchpins in getting equity and lenders to commit to new deals in redevelopment areas and really create that momentum back into the marketplace for our products.
For smaller towns, it's a much bigger issue. And for years, and I think Mayor Morristown will agree, for smaller towns, it's a bigger issue, becomes a political issue. Why are rich people getting a break and we're not? And for years, we resisted. I've been mayor long enough I've gone through 3 recessions, and obviously the last one being the worst. And it stalls development. So we made a decision to offer abatements. We have mixed. Lennar Properties builds condos for sale ad valorem, and all the apartment complexes become a 15-year abatement. We offered 5-year abatements to anybody that wanted to do anything in the rest of the community. And I had an election last May, and it becomes an issue. It always becomes an issue. You're giving rich people a break.